Hey YouTube, so I'm going to talk about why I think asset prices have got a lot more falling to go, why it's going to happen, and what I'm looking for before I jump back in the market. So I want to make this super quick. So here is something I made a long time ago for one of my trading pubs for the community. Long story short, we have a cauldron of shit. We have war. That's going to be an ever-going thing. Finland and Sweden potentially joining NATO isn't going to sit well with Putin, so that's not going to do alleviate the situation. The food crisis is something which I've talked at length about. Watch previous videos, but that's going to really kick up a storm over the next 6 months. Taiwan is really starting to heat up. The World Economic Forum are already talking about the next pandemic. So yeah, that's there. Rate hikes. We've got at least another 2 rate hikes. So yeah, that's definitely not a bullish thing. Hiking rates into a recession always leads to basically crashing. GDP is crashing. The money velocity is crashing. That's like the most important chart on the planet when it comes to finance. Stocks are crashing. As a result of stocks crashing, mortgage lending is decreasing because the credit markets get hit first. And therefore, you know, when the credit markets get hit, the credit cards, so to speak, of big lenders are effectively chopped up. Therefore, they stop lending to people that need the money. They'll happily give money to people that don't need it, but yeah, so that's not good. And obviously the SEC has like a mission against crypto. The fact that they haven't approved a spot ETF yet, but they'll approve, you know, all sorts of other things like futures, the short ETF that's just launched, yeah. And again, that we got this other sort of war bubbling with, you know, the whole freedom of speech type stuff with Elon versus other stuff. Anyway, all of that you probably don't really care about. Doesn't really matter. The things that you know, in terms of actionable data, that will actually be helpful to you right now, is this. So we have rate hikes now. Obviously, the Fed is trying to posture that they have the ability to raise rates. And control nominal inflation or the CPI, but they don't. They can only raise them so much before they have to do sort of like in poker, before you do sort of check raise. They cannot just, you know, if they raise them any more than sort of 3%, they're going to kill the economy, and obviously they don't want to do that. So they got this weird game where they're trying to posture that they could raise rates a lot further, but they really can't. Anyway, long story short, a raising of interest rates increases the dollar strength. So if we just crack open the dollar here, US dollar, and look at this on the daily chart, you'll see that the dollar has been rallying hard since basically the beginning of March, and this is where QT, quantitative tightening, started coming back up, or started basically, and we've got this nice sort of curved rally here. Now when we're looking at this, so let's get a different picture. Right, weekly chart, let's draw some shizzle, minizzle, stuff like that. So classic megaphone pattern really, but basically we have, you know, a fair bit of space here that, you know, this trend line is going to suck it up into, and I don't think the dollar can actually rally that much harder before we see an absolute, you know, shitstorm in the dollar, and that's when things will go kaput pretty much. So QT equals dollar going up, and when the dollar goes up, all asset prices fall. If you don't believe me, just look at what asset prices have done since the beginning of March. So March, this is really when, or sort of end of, let's say beginning of April, May, beginning of June really, you start to see the dollar strength here. So this is the weekly chart, yeah. Yeah, it was really sort of beginning of June. What happened in the beginning of June? Well, beginning of June we saw big old crashing, and we had a lot of falling before that. and that's because the dollar basically bottomed out at beginning of March time, and started having these big old sort of reversal patterns. So S&P 500 really bombed since beginning of June, and also around March time. Dow Jones, exactly the same picture. And when you look at all of the big assets that have, or stocks that have really bombed, I mean, look at Netflix. Netflix has actually been falling for quite a fair while, actually. Basically, all stocks are pretty much cratering here at this point. Now, the thing is, not every crash has an oil spike, but every single time in modern history, so let's say over the last 100 years, every single time there's been a meaningful oil spike in prices, it has always led to recessions. So when we're looking at oil right now, we're seeing oil has spiked big time at moving into a recession. But it doesn't always go on forever. So what tends to happen is that it causes the recession, it causes the economic entropy, or slowdown, so to speak, and then the demands for oil drop off because not as much stuff is being made, not as much stuff is being shipped, not as much stuff is being consumed, etc. So oil falls off a cliff. I mean, you can see this if we open up a proper oil chart. Let's look at WTI. And then let's go back to say 2008, or hell, COVID, 2020, economic, energy. Oh, this didn't. It's not going back in much either. That oil futures, that would be close enough if it goes. No, for some reason I can't find a good US oil ticker that goes back far enough. Fed. Here we go. No. I will not waste your time in this, but there's definitely going to be. Let's try crude. WTI crude oil. There we go. Come on, I just want 2008 prices, please. There's 2020. Let's squeeze it back. Yeah, I've used this before. There we go. And there's 2008. Big old spike into recession, and you see a massive crash. So moving forward to now, where are we? Remember, the baseline always looks after you, okay? When base support is breached, you get the hell out of there, okay? So yeah, at some point this will roll over, and that's really when the economy is basically rolling over. So that's that to look out for. Now, in terms of crypto, when am I going to get back in? So really, we're not going to see a proper reversal in crypto until we have a number of things. Big liquidations. So we have bullshit projects out there like Luna 2, Celsius, 3AC. All of these are up shit's creek right now. So I think 3AC owes something like $600 million to Voyager. There's lawsuits already being flung around. So yeah, we need a few crypto projects to die. That in itself will probably be, people will pinpoint that as the capitulation spike down. But yeah, I'm looking for it. I don't really want to go back in until that happens, because that will then create proper fear. The fact that we have this shorting ETF now means that Wall Street can actually, manipulate with crypto prices a lot more. So I mean, just wait to the volume when that picks up, and we should see lower prices. And so in terms of a reversal, I don't, we're not going to see 100k Bitcoin or any meaningful reversal until we have a spot ETF. So, Gary Gensler of the SEC, he's obviously not a fan of crypto. But, let's put my conspiracy hat on here. If I was an immoral trader with loads of resources, what I would do is, do what they're doing, delay anything, positive for crypto, like a spot ETF or Grayscale's spot ETF. Dump the market with the short ETF and other measures, and then right at the low, when they've dumped Bitcoin to 10k, 5k, whatever, wherever the fear is highest, then allow the spot ETF and let all your cronies buy Bitcoin really darn cheap. And the other thing is that you must not have a V reversal. So here's the thing: if in the market, let's say this is Bitcoin, and Bitcoin's falling, and then suddenly you have this, that is not a healthy recovery. That will always lead to more falling. So the recovery I want to see with Bitcoin is sort of a bottoming out pattern like this. Even if that bottoming out pattern lasts 3 months, I still need to see that. That is something of it's probably 3 months is sort of the smallest sort of gap. If you look at Bitcoin, this is not really a bottoming out pattern. So this, I think, yeah, this was basically a V reversal here, but it didn't end well. A good example, but still that May to July, no. What about 2020 when we had that? Yeah, sorry, 19. Sorry, we had this big old, this big old crash in 2018 for crypto. Here it looks pretty quick, but it's from sort of November 18 to March. Yeah, that's a nice period of bottoming basically. So don't worry about trying to call the bottom. You will have plenty of time to get in and out around sort of the lows. And so we need that sort of bottom before we see any form of high. Again, here is, yeah, it's not exactly a V reversal, but it took its time to really start growing. So yeah, until then, I'm really not interested until we either get above 22 or below it. And typically, because of how the futures expiry dates work and how the market moves, like after a big fall, you will always see a consolidation, always. And so if I don't want to delete my stuff on that particular chart, so let's find another one. Let's wait for my internet to hurry up. Yeah. So basically, the sort of price action we're seeing over here is basically going to be playing out as we speak. Bitcoin is very fractal in nature. So yeah, expect a bit of fanning around, maybe a few, fake outs and whatnot, but I still am expecting further falling, especially if stocks are going to crash. I mean, talk about base support. Look at this base support. Look at that base support. Look at this base support. Yeah, if you want something which is eerily spooky, just have a look at the S&P 500 during 2008. Remember, the charts always repeat themselves. It's like Mark Twain, history doesn't repeat itself, but it rhymes pretty darn well. This is 2008 here of the S&P 500. We had a descending sort of topping pattern here, and then finally base support broke, and then it was pandemonium. So that sort of picture and where we are right now is eerily similar. So yeah, it's good to not be in the markets at the moment. Yeah, just got to wait. Crypto has a lot further to fall, but I just want to sort of tailor or sort of change the ending. Not change the ending of this. If you are accumulating now at 20k or 1,000 ether, that's still pretty damn good. I mean, we're going to see some generational wealth making opportunities soon. And even if you buy Bitcoin at 20k or ether at 1,000, they're still pretty damn good opportunities. Sorry, one last thing I just remembered is in terms of my bottom alerts. One of the best bottoming indicators, the one that hasn't actually been broken yet, as in this indicator, in my opinion, is the most important one, is the SSR oscillator. Now, again, this video is not the time and place to explain what it means. If I take a screenshot of this and then just ping this over onto this doodle pad, there we go. So what you need to look out for on this SSR oscillator is the -2 level. So here is -2, and this is how I personally use it. Not everyone does this, but look at the -2 level. Now, whenever this oscillator, so this orange stuff, breaches the -2 level and then has a nice positive uptick, that normally indicates a bottom for Bitcoins. As you can see here is the bottom, and then it rallied quite hard. Here we had another one. It hit the -2 level, had an uptick. That was a nice little bottom for a mini sort of rally, but a bit of a fake out really, because it really crashed below the -2. But then you had the nice uptick again, good bottoming pattern for a nice rally. Same again, another crash into the -2 level. Nice uptick here. And then that, again, nice boom time for the price. Again here, -2, wait for the uptick, like this. And that is pretty much the bottom. And it had a nice little rally here. Here we had a bit of a fake out, I think. I mean, it still worked. -2, nice uptick. It would have got you in the lows around here for... I mean, it doesn't look much there, but that is still a nice price increase. So over here, you're getting it Bitcoin sort of 35, 36, 38, and it still rallied back up to sort of 47. So it looks flat, but it actually isn't. And last but not least, we're still in danger zones. Is this a little dead cat bounce? Has this got further falling? I don't know. But I'm keeping my eyes peeled on this SSR oscillator. So yeah, that's it. Hope that helps. I'm sure I could probably think of more things to talk about. Yeah. Anyway, toodles, bye.